Hi friends, today in this video we'll learn how to do accounting for accrued income or income receivable. Now what is accrued income? How to account for accrued income or income receivable? We'll just take an example and try to understand what is accrued income and how to recognize it. Let us say a business makes a fixed deposit makes an FD of say rupees 10 lakhs in a bank on 1st June 2021. The FD will fetch an interest of 6% per annum payable on maturity. That means the interest will be paid to us on maturity, that is on 1st June 2022. So this is the situation before you. You are the accountant of the business. We are preparing our accounts for the period 1st April 2021 to 31st March 2022. This is my accounting period. So if this is my accounting period, my accounting starts on 1st April 2021 and the accounting period ends on 31st March 2022. The fixed deposit was made in the bank. Fixed deposit was made in the bank on 1st June 2021 and it is going to run for a period of 1 year. This is my accounting period. That is the period for which I am going to prepare my financial statements, and the FD tenure of the FD is 1 year. It's going to mature on 1st June 2022. Now the situation, if you see the situation, it says we have made an FD for rupees 10 lakh on 1st June 2021. The FD fetches interest at the rate of 6% per annum payable on maturity. That means the interest will be paid to us only on maturity, that is on 1st June 2022. So on 1st June 2022, we are going to receive interest. We are going to receive interest for 12 months. Now, the question arises, the interest for the period 1st June 2021 to 31st March 2022 and interest for the period 1st April 2022 to 1st June 2022. So these are how many months? These are 10 months and these are 2 months. Now the question arises, the entire 12-month interest would be received on 1st June 2022. Is it correct to recognize the entire interest for 12 months on 1st June 2022 and show it as an income for the period 22-23? So here the question is, this 9 months interest and this 3 months, 10 months interest and this 2 months interest, when should it be recognized as income in the books of accounts? During these 10 months, we have earned the interest income, and this 10 months interest is paid on 1st June 2022. Even though we have earned this interest for these 10 months during our accounting period, during the accounting period we have earned this interest. Should it be recognized as income in the year in which it is earned, or should it be recognized in the year when it is received? We follow accrual system of accounting, which says you have to recognize the income as soon as it is earned. Every day the bank is paying me interest, that means I'm earning interest on my fixed deposit, but the bank will pay the entire interest on a fixed date in the future. So we should not wait for the realization of interest to recognize interest as income in the books of account. We should see when the interest has been earned. Interest has been earned each day small amounts of interest we have earned. So each day when you have earned interest, you have to recognize it as an income in the books of accounts, even though it may be received in cash later. So how do we deal with it? On 31st March 22, when interest for 10 months is earned, or you also use the term accrued, we have to pass an entry here. We have to recognize the interest income in our books. We'll say to interest income, 10 lakhs into 6% into 10 by 12. So 10 lakhs into 6% is 60,000, into 10 by 12 is 50,000 rupees of interest income we are going to recognize in this period. I am recognizing interest income as credit because it is nominal account, incomes and gains, credit. Now we have not yet received the money. So what should we do? We have to recognize an asset in our books called as accrued interest. So this money is receivable. We have to recover it from somebody. Who is that somebody? The bank. So till the time the bank pays the money, we are going to show it as a receivable in our books of accounts. This is like a debtor in our books of accounts. So we will pass the entry accrued interest account debtor to interest income 50,000 rupees. On 31st March 22, what will happen is, in my P&L account, interest income will be credited. I'll say by interest income 50,000, and in my balance sheet I'm going to show accrued interest 50,000 as an asset. So I'm going to recognize the income, I'm going to recognize the asset in my books of accounts. So this is how I'll deal with accrued interest. Now what will happen in the next year? On 1st June 2022, that is the next accounting period, when accrued interest is received, now I'm going to receive the accrued interest also. Bank will pay me 12 months interest. I will recognize it in two parts. $10 and 2 months. This 10-month interest is interest receivable for the last year, for the last accounting period. Now when we receive the money, we'll pass the entry bank account debtor. Bank is going to give me in the form of a check, or the bank is going to put money in my account. So bank account will be debited and accrued interest account will be credited 50,000. With this account will get closed. And when I'm going to receive another 2 months in interest, I'll pass the entry bank account debtor. It will be 10,000. If you want, you can check it here. 10 lakh into 6% into 2 months by 12 months. Okay. Now this is income for the current accounting period. So I'm going to credit interest income account directly. This is how I'll deal with this entry in the next accounting period. So I'll just write down the scheme of entries for accrued interest for the sake of clarity. I'll write here. When income for the accounting period is received, in the same year. When I earn the income and the income is also received in the same year, I pass the entry cash or bank account debtor to income account. When income is accrued, that means earned, accrued but not received in the same year. That means we have earned some income but the money was not collected in the same year. So what do we do? As per accrual system of accounting or the mercantile system of accounting, you have to recognize the income as soon as it is earned, accrues to you. So the entry would be accrued income account debtor to income account. That is when income becomes due or it is earned. For accrued income, this is the entry we pass. In the year in which it is earned, when accrued income is received. So income already recognized, but now it is received. We are able to now collect the money. So we'll pass the entry cash or bank account debtor to accrued income account. This is an asset. This is an income. Here the same asset is realized in cash and we get cash instead. So this is how we deal with accrued income in our books of accounts. So this is the scheme of entries. So when we receive the income, when the income is earned and received in the same period, we pass the entry cash account debtor or bank account debtor to income account. Straight away income is recognized in the P&L. When income is earned but the money is not yet collected by the end of the year, income is earned during the year but it is not yet collected. In such case, we pass the entry accrued income account debtor to income account. Income will be shown in the P&L account. Accrued income will be shown as an asset in the balance sheet. It is just like a receivable for the business. When accrued income is received, when you collect the receivables, we pass the entry cash or bank account debtor to accrued income account. Okay. So here what we are doing is, we are saying somebody is due to pay money to me. So that person is treated as a personal account. Receiver of my money, I debit him. This is nominal account, incomes and gains, credit. So I'm recognizing the income and I'm saying that somebody has to pay me the money. So till the time he pays the money, I recognize him as a debtor in my books of account by using the term accrued income. It is a representative personal account. So I repeat the entries once again. When I earn the income and receive it in cash, entries cash or bank to income. When income is earned but not yet received, you pass the entry accrued income account debtor to income account. When accrued income is collected in the next accounting period, we pass the entry cash or bank account debtor to accrued income account. So these are the scheme of entries. This is how we do accounting for accrued income in our books of accounts. Thank you.